Hi, my name is Chris Showalter. I'm CEO of Lifezone Metals, and Matthew, thanks for having me here today to talk about Lifezone.
Well, a nice way to end the year, actually. And we saw the press release with regards to the increase in the contained nickel in the measured and indicated category. What does that mean, though? What's it do for you?
Yeah, and I think one of the things we've been looking to do is really provide information on some of the quality of work that's been achieved over the past year. And I think by coming out with this update on the resource, it's us trying to give a little bit more information to investors, to the market, on how the DFS has progressed and kind of what's coming. And what's coming is really this is a demonstration of really the super quality of the Kabanga nickel project and specifically the ore body. So really to come out and highlight that we're talking about really over 20% increase in the contained nickel in what is really the premier ore body, which is the North Zone. And that is the largest, highest grade section of the entire deposit. And to increase that by 20% is really it's demonstrating that we are able to unlock the highest grade, most superior section of the deposit for the purposes of the DFS. So that there's a bit of the indication there, and then really it's increasing the what we've done is we've increased the measured and indicated across the entire all the zones. So really Tembo and North, and so that adds well over 3 million tons of attributable to the project at over 3% nickel. So that's where saying we're adding 3.3 million tons at over over 3% nickel. I mean, that's an incredibly strong statement. I think when you look at the nickel projects globally, when you look at how competitive the Indonesian market has made the entire sector, and you look at how how are these projects around the world going to compete? Well, it's going to be these superior resources with this superior grade that are going to be best positioned. I think what we're doing here in this press release is demonstrating how phenomenal the Kabanga resource is and how we'll be down firmly in that lower cost category and the potential that it has. And also when you look at the amount of drilling that's been done on Kabanga historically, at this point, there's been over $200+ million spent on a drilling program. So incredibly well-defined resource. And that has given us now in this updated resource statement the ability to declare that over 80% of the resource tonnage is now in that higher confidence measured and indicated category, which is a rare feat, I think, when you're looking at projects to this stage. And what we've also highlighted in the resource statement is the additional exploration opportunities as well. So we have 2 other targets, one Rapona Hill we're very excited about. So really just kind of highlighting some of the future potential that exists within the overall complex that will give us the ability to extend the life of the mine over and above what we're focused on right now in the DFS.
Right, and I'm going to make some assumptions around the DFS in the sense that, okay, you can, there's more of it. The economics will presumably be better because there's more of it, and the polymetallic component we can talk about. Your technical solutions for that concentrate in a sec. But the big problem in the market at the moment is getting finance. Companies are undervalued. Mm-hmm. They are trying to find ways conventionally of funding these things, finding it really hard. That some people are looking to alternate means of alternative finance, they're calling it. Mm-hmm. So where are you in that mix?
So I think what we've done is we've been able to communicate to the market a very clear pathway of how we're intending to finance the Kabanga project. So number one, we've brought in BHP as a strategic partner. So very strong endorsement from the largest mining company in the world, which really resonates to the quality of the project and the Kabanga deposit. Now, that has put BHP in a position to have that optionality to go to a majority shareholder. But in addition to that pathway, which will be exercised subject to BHP's board approval, once we release the results of the DFS and once we trigger that option. So that's all a very well laid out process that's underway. In addition to that, what we've done over the past several months is highlight the new stakeholder kind of engagement. That primarily centers around the U.S. Development Finance Corporation, bringing them in on the political risk insurance wrapper that we're in the process of applying for, and we've retained them for, and then also the project financing initiative where we've announced that we're going to be bringing in project finance and looking at that as a very complementary option to enhance the economics and also I think what that does is by bringing in the US DFC to anchor that, that would bring in other very high quality financiers to round out that syndicated debt facility. So another very strong endorsement. And then we announced an MOU with JOGMEC, which is a critical facilitator for the Japanese government to bring in Japanese strategics, and that's really wrapped around the marketing rights that we have. So we couldn't give a lot of detail in that announcement, but what people should look at is JOGMEC is a facilitator, and so negotiations with Japanese companies as part of that facilitated process through JOGMEC gives a little bit of an indication of one additional stakeholder we're looking at, which would really call it Team Japan, the Japanese coming in a way. So to add a funding that brings in BHP as a key equity investor, bringing in the U.S. government as a key stakeholder, and bringing that whole U.S. nexus and that mineral security partnership and all those kind of geopolitical forces, very powerful when you look at the ability to get this to a fully funded project. And then adding in, leveraging the offtake rights that we have to bring in that kind of, like, as you said, that more unique financing, which is kind of like the last sliver of the capital structure for Lifezone to be able to monetize that to fill any gap that would be left outside of these other funding routes. So the equity from BHP, project finance anchored by DFC, and then us marketing those or monetizing those marketing rights potentially with the Japanese through that JOGMEC MOU. That gives investors a very clear insight as to how we're looking at the overall capital structure being designed and laid out over the near term.
And what about any sort of African involvement? So a lot of the African banks seem to be getting interested again. And some of the European banks focused in Africa are getting interested again on the continent. You see much of that?
Yeah, we are seeing a lot of it specifically in Tanzania, and a lot of the infrastructure investments. So the African Development Bank, the ExChina Bank, supported by a lot of the international DFIs, have very much played a key role in the infrastructure facility. So the standard gauge railway that's been developed. You saw the ExChina Bank, I think, really through an Egyptian consortium come in on the Nyerere hydroelectric dam. So you have seen quite a lot of involvement there. You have seen in Tanzania, there are other projects that have brought in the IDC of South Africa and the Development Bank of South Africa. So I think you are seeing supportive commitments from a number of DFIs, and I think that's where we specifically look for the Kabanga project, because we have a big, strong equity partner in BHP. We don't need to ask a lot of DFIs for maybe additional equity contribution to become major equity contributors. So where they can play most effectively is either on the project finance side or on the infrastructure support side. I think that's what's been pretty powerful in Tanzania, is a lot of the money from overseas contributors and DFIs has gone to the development of infrastructure, which is a massive enabling factor for not only our project, but other projects in Tanzania. So it has that catalyzing, multiplying effect that we're seeing really now play out in Tanzania.
Okay, so like I mentioned earlier, perhaps people looking for alternative means of financing. You've got some converts in there already. Does the involvement of the BHPs, the DFC and the Japanese kind of consortium through JOGMEC, does that sort of mean that we can expect to see conventional financing across the board here? I guess if maybe offtakes, depends how you view that.
Yeah, I say conventional in terms of the project finance. I think that's definitely the path we're going. To have kind of a very high standard project financing anchored by the DFC. So what are their key requirements? Their key requirements are you do the project to very stringent IFC standards. So the sustainability metrics we'll have to adhere to are going to be incredibly important. And I think that provides the comfort to a lot of other banks and institutions to be able to follow their lead. So when you hit that first standard of the DFC, you get a lot of institutions that will trust the body of criteria required. So I think that is definitely a standard multilateral institution project financing route. I think what's a little bit more exotic is the offtake, because we've had a number of discussions with automobile manufacturers, battery manufacturers, other groups around more unique funding structures, and so we have not made a decision as yet, but we're pretty advanced in terms of what we think would be the right way to monetize and to potentially do it in stages as well. We think will be an option. So one traditional path into project finance, but then what is great about the offtake, that gives us a lot of flexibility to be a little bit more, as I said, exotic and creative when it comes to filling any potential equity gap that Lifezone might have in the overall funding structure.
So creative and exotic in terms of the way that the terms, but not necessarily going with. I always think that AAA offtake partners, fine, not a problem. Sometimes we've seen some quite funky things going in Africa from a position of desperation. It doesn't sound like you're in that position for sure. But with regards to the offtake partners, do you have a view on the type of people you will and will not do business with?
Yeah, and I think we also made commitments to BHP as our partner that we're not going to go out there and do some really poorly designed or prejudicial offtake agreement, because we're going to be bound by that relationship, and there are terms within our agreement with BHP that will define certain guardrails in terms of the offtake agreement, and we're in a position as well to really want to deal with those highest quality counterparts, and I think a good amount of that is driven by their motivation to access the clean credentials of the material that will be coming out of Kabanga. So when you look at where is the highest demand going to come for Kabanga's material, it's going to come from those institutions or those automobile companies and manufacturers that are looking for the lowest CO2 product to adhere to certain sustainability measures and commitments they've made. So that puts us in the category of what would be, I would consider, kind of that top tier, because those are going to be a lot of the Western European. And I think those are, that's very much the direction we've been looking in negotiations.
Right. Okay. And also just before we kind of jump into some of the technical aspects and also the recycling I want to talk to you about today, is the ExChina supply chain. Looking at the partners that you've got and some of the names you've dropped today, this is clear that this is a Western project, because Africa's seen as the shopping basket for China typically, certainly with these large scale projects. So is that the case?
Yeah, I think because we've gotten a lot of support from a number of the Western countries. Specifically now that we've established this core stakeholder in the U.S. government and the initiatives that they've been supportive of, that really helps direct the expansion of additional stakeholders within that network and within that supportive policy umbrella. And I think that's something that, I think it's great for us. I think there's an enormous amount of engagement with not only the U.S. but also this mineral security partnership, of which Japan's also a member. So there's a lot of there's a lot of communication within those channels as well. And I think it's I think to your point, yes, China's been very effective in Africa specifically, and I think we're right at the front lines of where you're seeing some of these geopolitical developments, where you're looking to see other countries try to crack in and really catch up. And I think that's great for us, because it creates tension, it creates competitiveness. And what Tanzania does really well, I think, is they're not all one way or the other. They take a very balanced approach to West and Eastern interests, and I think that's in their best interest. They can utilize that to their advantage as well. So I think it's all these factors. It makes it a pretty exciting dynamic right now in this sector to have all these kind of geopolitical forces kind of adding to all the optionality of how we can pursue various ways to develop the project, and how we can make sure we get to a very successful commissioning of the project down the road. But interesting time.
I think it's fascinating. So you're going to see, like the DFE is kind of stepping up. I spent the last 20 years flying around Africa, and most of the plane is filled with representatives from China, and they've been, they're 20 years ahead of the game, and got a lot of the good stuff. With you guys, do you think you've kind of set a sort of template for Western suppliers? And I'm focusing on critical minerals, not precious metals here. Do you think we'll see more deals like you're creating here with Western companies?
I think so. I think one of the things we get asked a lot from investors right now is Kabanga's been a nice, established case study within the U.S. mineral security policy initiatives, and that sits within this mineral security partnership supported by the DFC, but then also will that survive kind of the next transition in the administration? I think, we've spent a lot of time having discussions, and yeah, I think this focus on security of battery supply chain is incredibly consistent across the aisle. You've seen a lot of bipartisan support for that, and a lot of the DFC initiatives were initiated actually during the Trump administration, before the Biden administration came in. So we're relatively comfortable. We've received very positive support for the project from a bipartisan standpoint. So I think we're one of these projects that can be a continual case study of how you can support emerging markets and other allied countries to develop these economic agreements where you see supply chains being secured. And I think I think the ability to continue that theme. I don't see any rupture at this point in time. I think the challenges in the market right now, obviously nickel prices are just one of those big things. It's working through that cycle. I think the Indonesian story is going to start changing. I think it's very interesting to see some of the new headlines coming out there. Some of the things you're seeing from the Indonesian government relate to the fact that they have very much established a cornered market share in the industry, and so therefore they would be focused more on kind of pricing. And that's a very interesting message to start sending to the market. You get your market share, you've won the game, but okay, now we need to make sure that we've killed the nickel price. Now we need to focus on making sure that our companies that are the largest players in the global nickel market now are operating profitably. So that's an inflection point that I think we've been picking up, and they've started discussing, and that's a very important one, an important theme for people to start tuning into.
Well, absolutely, especially if your average goes from above 2% down to below 1%, unit margin is going to get crushed there, and I think we're also hearing that they're also importing as well from Philippines. So it's a very interesting space at the moment, and obviously high grade projects will do better than lower grade ones. Right, I'm going to talk about the kind of recycling thing, because it's something we haven't talked about, I don't think, very much. What do you see as the opportunity there, and how much at the forefront of your mind is it?
Yeah, I think I described this to another investor earlier this week as really kind of being one of these sleeper projects that I think is going to get a lot more attention. I think people, when they can see the detail, when we come out and release a lot more information coming up in Q1 on what we're working on, and what we've really we've always had a lot of conviction that our technology can come in and disrupt this entire supply chain. And what you have in the recycling industry for PGMs and auto catalytic converters in the US is you have an incredibly fragmented, multi-step supply chain where you have collectors, you have regional aggregators, you've got additional regional aggregators, you've got decanters, smelters, furnaces, and you have refiners overseas. So there's a number of different parts of this chain. And it hasn't really been broken down and consolidated in a way that you would expect, because these are all small family-owned businesses typically throughout, and they've never been incentivized to really consolidate. And it's very hard to consolidate something like that. And what we've identified is the ability to come in and do a more full, vertically integrated entire play to come into the sector. We have announced obviously the partnership with Glencore, and to bring them in as a investment partner, and then also to bring in their support in terms of working capital facilities and their balance sheet, which is obviously a critical factor to provide liquidity to a lot of these parts of the business, and then the off-taking expertise as well. But what we're looking to do as well is kind of tie in some of the other segments of the industry. And so that's something, that consolidation play is something that we think, you deconstruct all these vertical components, and then you just capture margin. The more each one you break down, you're just consolidating more margin. And I think our competitive advantage, because we always look when we want to get into new businesses, we look for a competitive advantage. It's the speed of processing. So to be able to get from recycled product out of a muffler of a car to final refined critical metals within one location, that's incredibly consistent with the U.S. domestic policy. So we think we're going to be doing something that complements not only our broader vision and strategy, which is very much focused on the Kabanga project, but this is incredibly consistent with how the U.S. wants to enhance domestic refining of battery metals. And I think, PGMs more, critical metals, but they are part of the critical metals list, and so it's something that is just another demonstration of how we're able to focus on some of these key themes in the market right now and do them in more creative application of where our area of expertise lies. And recycling and PGMs are two areas that we are really excited about. And this is a scalable, bigger market that we can attack. Big projects like Kabanga, huge capital projects like that take time, long development pathway. But recycling, we can replicate these plants. We can be really focused on scaling up this whole initiative, not only in the U.S. but more in North America and then internationally. So it's a really awesome project, and we've brought in Justin Froneman to run this business for us. Really excited about his level of experience, his energy to jump into this entire business for us and this expansion. So we're really looking forward to making a few announcements in the first quarter about how we're going to really kind of crack into this market.
Okay, so that potential dual track thing going on there, obviously quicker to commercialization.
Yes.
Than Kabanga. You've got the Glencore component in there. I'm not quite sure what that does for you. You can tell me in a second. But revenue, albeit it's going to be like thinner margins on this, right? But you feel that it allows you to be in the room. Is that the idea in terms of a solution provider for critical mineral problems? I mean, how do you view this?
I think one way we view it is it's a faster demonstration for us to get into the market and show our hydromet alive, working, and producing critical metals. That's a key driving factor for us. Number two, the scalability. We can replicate this. We get the first plant up and running. We can start looking at additional plants, and we can ramp that up. So it's a much more scalable type of business opportunity than, say, a Kabanga, which is one big, huge fixed project. And I think to your question on the Glencore relationship, so they're 50-50 partners with us, so we're joint venture partners with them, and so it brings another. What we like to highlight is we now have another major mining company supporting us in one of our hydromet initiatives to provide solutions to unlocking critical metals in a clean, green processing way. So unbelievably consistent with Glencore's current philosophy. They focused a lot of their recent year highlighting how they want to crack into the strategy of above ground mining or recycling. And we're just another area where they're demonstrating that. So really, as I said a few times, just very compatible relationship right now.
Right. Okay. And I did say we'd talk about the tech thing. I only want you to talk to this because I think there's a kind of portion of the market who's obviously Kabanga's been around since the 80s. Owned by Barrick and Inco, etc. Falconbridge. And no one was able to kind of crack the nut. Do you think now you've done enough to actually say, look, we've proved at a kind of commercial scale that we've got the technical solution to unlock all of this value?
Yeah, I think so. I think we've demonstrated a tremendous amount of progress. And I think when you look at the press release we had, Q3 this year, where we went and demonstrated and showed the actual physical cathode material that we had been able to produce in our labs. And I think that's the first time you've ever seen a demonstration of any of the Kabanga material brought to final refined product. And so that is based on our engineering design, our flow sheet, and basically the entire process we intend to implement at Kabanga. So we have demonstrated the ability to refine those products to final refined metals. And I think that is that's evidence that we think we have the right flow sheet for this product. We have a lot of confidence in that. And then I think the infrastructure that's been put in place has been phenomenal. I mean, Tanzania, with the previous owners, as you indicated, the Barricks, the Glencores, the Falconbridges, they didn't have this enabling infrastructure. So we very much benefit from Tanzania and the amount of time and money they've spent over the past 5 years. Hydroelectric dams, standard gauge rail, roads. That is such a major factor. And we need less of that infrastructure because we're not exporting a heavy bulk concentrate, and we don't need to do port upgrades, and we don't need to do the bigger extent that would have been required if you're hauling concentrate for the entire life of the project. So all these factors kind of come into play, and I think a lot of it's timing as well. I think we got into the Kabanga project right as battery metals were starting to really gain an additional momentum, and I think we want to be building the Kabanga project when nickel prices are low, so that when nickel prices start correcting with a lot of the mines closing and a lot of the, the cycle taking a different turn, yeah, I think we're glad we're not selling nickel right now, but you sure as hell want to be building a nickel mine right now, in our view. But it's got to be, the economics have to drive the justification. I think the quality of the ore, the grade, Kabanga is just in a exclusive category that just the economics can justify, extremely challenging nickel markets.
Chris, appreciate you making some time for us for Christmas, and we will speak to you in the new year where we can talk about economic studies and all things nickel. Appreciate your time today. Thank you.
Excellent. Thanks again, Matthew. Always appreciate it.